the market. And whenever something is gonna happen here where we're gonna pull over and break all this top. All right, now let me tell you something. When this candlesticks is also, this is another opportunity to buy into this market. Okay, because what it's talking about is that we're gonna break this top here. We're gonna break it. We are gonna break it. And see, we broke it. Price went and came down from this middle Bollinger Band. You see, you know what is going on, that actually we are above the 200 and we are up. We should be buying, right? You know, we should be breaking the tops. All right, good. And you know that this kind of movement might continue for a long period of time. Okay, so what you want to do is that you understand the fact that whenever there's will end by touching the moving average 200, that is the major retracement. But it doesn't happen all the time. Okay, it only happens when the trend is about to end, because when Bollinger Band pull back and come touch this 200, definitely .50 different entry point. Okay, different entry point when the price is coming below this central band of Bollinger Band. You pick them up there, you pick them there, because you're gonna be profitable, and that is how to be profitable with the moving average. Okay, especially when you're using a long-term moving average like moving average 200. If you the type using that moving average 9 causing the moving average 20, okay, and that has its own disadvantage also, but the moving average 200 help to protect your stop loss also. Okay, but the main secret behind it is that you don't need to trade like a big lot size. So the second point is that when you're looking at my chart, okay, and I'm looking at the fact that I am up with the price is above this moving average 200, so I know that, okay, and for the price to cross my moving average 900, I think the bigger chart is they are changing to up trend. Okay, the trend is changing to up. So how do I know all this? Okay, this is the reason why this moving average happens to be on my chart. Okay, when my price here cross the moving average 100, I understand the fact that, okay, 30 minutes chart has changed. When it's crossing this 200, I know that, okay, 1 hour chart is changing. And when it crosses this 900, I know that, okay, 4 hours chart and daily, they are preparing to make a change. Okay, but if you are confused about this, because this took me a long time to understand also, look at what I'm touching here. This is CCI. Okay, this is CCI, and this CCI, look at, it's set to be like CCI 200. Okay, we have this kind of things also like MACD. Okay, MACD all depend on the settings. Okay, but this setting you see here is CCI 200 period. Okay, based on this 200 period moving average. When you see this CCI above this 0, it's telling you what? That we, or the price, is above this 200 moving average. And look at here, when this CCI is below this 0, it's telling us that the price has crossed below this 200. So I'm not the type of trader who split chart on my screen, because I cannot even see the things I'm trading when I split the chart. I can't even see I can't see properly those things when I split 15-minute chart, 30-minute chart, 1 hour chart, 4 hour chart, daily chart. Then I'm having like 6 pieces of chart on my screen. I'm not that kind of traders who do that. This is the reason why I put all this moving average on my chart, in order to guide me through, because I have to know what is going on around the bigger chart. Okay, so with all these things on my chart now, let me know that the bigger chart are changing. They are changing to uptrend. Okay, you want to use things like CCI alongside with it. To me, when I take a look at CCI, where is my entry on this CCI? Okay, this is my first entry. Okay, I understand that CCI is above 0, so definitely I should be buying into the market. So where will I buy? Buy the dip. This is the dip. This is one dip. This is the dip. This is the time to buy, because when you see the dip, the price will rise again. So you want to be there before the price ever rise. This is another one here when it's just starting. Okay, but I don't want to talk too much about this, but this is why I base your concentration on this Bollinger Band, that even if you miss your entry, your crossover, but look at what about this Bollinger Band. When price, this candlesticks comes below the central band of Bollinger Band, these are your entry. But you need to know what is going on the bigger trend. You need to know the trend direction. Let me show you something that is also showing me the trend direction. Okay, look at this. Okay, because from this point here I can see the bigger chart, what is going on with the bigger chart. Daily is up, 4 hours up, 60 minutes it's up. The smaller one, 30 minutes, 15, they are up. Only 5 minutes is retracing. This is a retracement. And what is coming into my mind, that 5 minutes is retracing, that is telling me that my entry to buy into the market is coming again. If I don't use this also, I still know how to get the entry. And this is only one point of how you can be profitable with the moving averages. Okay, in conjunction with the Bollinger Band. Okay, price have crossed the moving average 200 and price have gone. So that means what? Because I understand the feeling of the guy who said he's not making profit. Because I understand that, okay, he followed the moving average crossover, and that is the only one trade he picked up. So that is the reason why a lot of people say we are making profit with this moving average. Then you will know how to be profitable. Like, to make it simple, I have to put the Bollinger Band in because of this video. Okay, because without Bollinger Band I still know what I'm looking for. Look at, when this candlestick comes below the central band of this Bollinger Band, this is your entry to buy into this market. You understand what I'm talking about? See, this is the same account we always use every time. I think we got the lot size here. It's still the same, 100, as you can see. And that's me. It's live. Let me show you something. Hey, see. I hope you see the lot size.
You see the lot size right here? I don't know where I'm touching now. Here, a being that is not even professional or that doesn't trust himself, that will now go put in 100 lot 2 times inside this thing. Nobody's going to do that. But I think it's only me who is doing that, man. Why? Link is going to be under this video. It's very important. We say, okay, let's try that support resistance from the base of the trend line, you see, to the high. That is your 500. Now, what do we want to do? Let's draw another trend line. Let's draw another trend line on this support. And then another line on the resistance itself. Okay. Now we got the high and the low of the chart. The high and the low, because this is going up. Okay. And now what we're going to do now is that we're going to go again to say, okay, I want to go and remove that support resistance line. I want to delete it. Okay, I deleted, but it's not yet deleted. But I want to insert another trend, another support resistance of, let's say, in this case, 100. We have it. But let's go again and make it like, let's go edit it and make it like 200. Support resistance, let's say it is 200. Okay, this is 200. We have 500. We have our trend line. We have 200. Okay, we have 500 support resistance, which is this, and we have 200. What does this mean? This means that we got a touch on the 200 low. Then we got a touch on the 200 high. Then we are expecting a touch on the 200 low to create a new 200 low, which means I'm going to go again to put a line on the 200 low to say what? Let me make this line a red line to say that, okay, let me make it a yellow line to say that, yep, if the price get there, let me say a buy, it's a buy zone, you know, I target a buy zone. So definitely what? Because I know the trend is going up with the 500 support resistance line I put here, with my trend line going up, then with the support resistance 200 itself, which shows when the price comes to bounce on this 200 yellow line, that is when I look to buy. This is it.
In today's video, I want to share with you how do you identify trend reversals. Specifically, I want to give you 2 strategies to identify trend change before they happen. I want to show you some telltale signs, or how do you use certain tools to determine if a trend is going to change or not. Now, you should be excited because in today's video, I'm going to reveal certain secrets that cost us a lot of money to learn. Okay, we went for other classes, we need to learn trend reversals, even if you are not trading counter trend. Okay, a lot of our videos, we do not advise you to trade counter trend, but this does not mean that you don't need to learn how to identify trend reversals. It's still important. So I want to start off this video by convincing you that you still need to know this. Then after that, I want to go into the 2 strategies. Okay, strategy number 1 will be how to go into the 2 strategies. Okay, strategy number 1 will be how do you use the break of structure? Do you use the break of structure? Basically, you are looking at the market structure to identify if a trend change is in play. then it's set. So really hope that you take notes for this, you apply it, right? Because this is a powerful concept that will help you to either get good trades, you know, at short the market at the high or buy at the low, or it help you to manage your trade. Let's say you are doing a trend trading trade, you're trend following, and you have a long position and you want to know when to exit. You can use this Dow theory as well. Okay, so I really appreciate you could just take 3 seconds to like this video, help us to reach more traders. As you can see, we do a lot of videos like that to serve. Let's say the trend's up. Okay, even in a with trend setup, what you are still looking for is you are still looking for a retracement. So let's say you are in the upward trend. So in this case, this portion over here, you need to, it makes a, this is a higher low, sorry, let me just write it properly, change. In fact, if you see this and you look left, this is kind of like a left shoulder, this is a head, and this is a right shoulder. It's kind of like a head and shoulder pattern, which is a reversal chart pattern. So this is a telltale sign that the market is going to reverse. The trend is about to change. And in this case, price carries on to break this low. And what you have is it becomes a low here. This is a high, and this is a lower low. So this is how you identify a possible trend change. Okay, as I mentioned earlier, regardless of whether you want to identify a trend change in this case, let's say you bought somewhere here and you want to exit here, not too clear. Firstly, I apologize. If not, please leave a comment down below, right? Just get your questions clarified. Write to us, email us, let us know if you need any help. Okay? We always read your comments. So if you need any help regarding any of these concepts, just leave a comment down below. Okay, that's strategy number 1. Now, strategy number 2 is the powerful concept. We did a quick Wikipedia search for you to show you what you'll find on Wikipedia. But what happens is that all these are theory. We don't just want to talk at you. We want to give you actionable steps that you can do, you can apply to improve your trade. So if you look at this Wikipedia and find out what the Dow theory is, you will notice this portion over here, and this is the portion that we are going to use to identify a trend change. Okay, I'll just read it to you. It says over here that the medium swing or secondary reaction or intermediate reaction may last from 10 days to 3 months and generally retraces from 33 to 66% of the primary price change since the previous medium swing or start of the main movement. Okay, so the key is 33% to 66%. This is the key. So let me show you how do you use it, okay? I want to give you the instructions first, the step-by-step guide first. Then I will switch to the chart to show you how I use it in real time. Okay, step number 1 is that you want to use the Fibonacci retracement tool, and you want to make sure that you have the golden ratio, which is a 0. We will use as a gauge about whether the trend is going to reverse or not. Okay, if price is supported at 0.618, then we can say that, okay, the trend is not ready to reverse. It's still likely to carry on this trend. But if the 0.618 from the recent swing point, okay, again, I'll go into the chart to show it to you. Swing points, you can't really identify which are the swing points that you should be using. Then you want to switch to the line chart, okay? The line chart will show you precisely where you should be focusing or where you should be drawing the Fibonacci tool from. So now let's go into the charts, and I want to show you how to do it. So this is TradingView over here. Okay, it's a free platform. You don't have to use TradingView. You can use any platform. But in this case, I just want to use the TradingView because it's the fastest. Okay, so the first thing you want to do is you want to pull out the Fibonacci retracement tool. So what you can do is just come over to here and you just go for the Fibonacci retracement. So if you were to draw it, you can see that there are many levels. For the purpose of this video and how to use Dow theory, you just want to be focusing on the 0.618. But in this case, I'll just leave the other values on. So what you want to do is you want to find the recent swing point. Okay, so let's just assume that we are looking at somewhere here. Okay, so you can see that euro dollar has been in the uptrend for some time. Okay, it's quite clear that we are in the uptrend. So you can see this is a swing high, this is a swing low, swing high, higher low, so on and so forth. Okay, so we are in the uptrend. So has this uptrend been, is there a sign that euro dollar is about to reverse? Let's draw the Fibonacci tool. So as I mentioned, you take the recent swing point, you can take here, level which is over here, has been broken. So this is a telltale sign that the trend has changed. Okay, so earlier, if you were to go back into history and you see over here, and you draw it, you can see that it slightly broke it, but in the end, it went back above. So you can see that this is not entirely foolproof, but it's a good gauge to tell you if the trend is changing or not. So moving it back over here, let's let me just get it right. You can see this 0.618 level is broken. So there are two ways you can use it. Okay, you can use this. Number one, let's say you enter a trade somewhere here and you're in profit and you want to know when to exit. You could have exited somewhere here when you saw that the 0.618 level is broken. Okay, the golden ratio is broken, then you can exit. Okay, that is one way you can manage your trade. You can use it as a trade management tool. The other way is that, let's say you were thinking of buying, but you see that this level is broken. Then you might want to lean towards the reversal side. Ways you can use it, depends how you want to use it. But the way I like to use it is just to tell me if looking for a reversal. So in this case, I'll definitely be looking for a reversal to the downside because the 0.618 golden ratio has been broken. One more thing I want to go through before I end off this video is to change to the line chart. Let's say if you just want to switch to the line chart, take the levels, okay, just map it something like that, okay. Map it something like that, change back to the line chart, and you can see, okay, so this is the low and this is the high, and then you draw. It costs us a lot of money, but I really hope you appreciate it, you really apply it, because there's no point in watching this video, us giving you all this value if you do not apply it. Okay, so if you have any questions, just let us know. Video
trying to show you this trade I've been holding for like
Hey, what's going on, man? What's going on with you, man? Today, I want to talk about Bollinger Bands. Like I promised to make this type of video talking about Bollinger Band and why I use it on my trading chart. Okay? But before then, I think we have to talk a little bit summary about everything we have talked about the moving average 200. Okay? When you take a look at the price, you see that the price separate from the moving average 200 and later we come back to the moving average 200. Okay, when you're using the 15-minute chart or 30 minutes chart, okay, the price separates from the moving average 200 but must surely come back to the moving average 200. Okay, look at the price touch the moving average 200. Okay, this is where the price will always start. It starts from the moving average 200. Okay, either by crossing it, okay, or coming back to touch it, then proceed to the real direction of the bigger time frame. Okay, now look at this place. This is a 30-minute chart time frame. Okay, and you have seen that the price separates from the moving average 200 period and still came back to it. Okay, this is the characteristic of the price when you're talking about the moving average 200. All right, so now let's talk of one thing, one problem that I noticed with the moving average. Okay, when you're using the moving average, okay, you only see the price separating from it, and you know that price is gonna come back to that moving average 200, but at a point you don't know what the price is doing. Okay, you don't know if it is the right time it's coming back, or maybe it's just fluctuating to proceed to the real trend direction. But now this is the main reason why Bollinger Band is so important. All right, let's say you take a look at this place. Okay, take a look at this place, this flat. I'm touching this flat. Okay, the price touching the top band of this Bollinger Band. Okay, touching the top band, upper band of this Bollinger Band. Okay, and you know one characteristic of Bollinger Band is that when the price is touching the upper band, it's gonna go back to touch the lower band. All right, it's gonna go back touching the lower band. Look at what it does here, touching the lower band. Okay, touching the lower band, it has to go up, touching the upper band. All right, later touching the lower band. Okay, good. This is not what I want to say. All right, this is not what I want to say. When you use this Bollinger Band with this moving average period 200, okay, how do you know that this price is coming back to the moving average period 200? All right, when you are on the 30-minute chart and you see this Bollinger Band period 20 and price is touching the top of it, just like this, okay, and you see the price breaking the middle band of Bollinger Band, definitely you have to get one thing inside your mind, that definitely the price is making attempt to go back to the moving average period 200. That is how you know that. And this is why Bollinger Band is so important, okay, because it provides something like a guidance, guiding you to make you see clearly what the price is about to do. Example, if I remove Bollinger Band right now, okay, and the price jumped from this moving average period 200 and now it's flat here, okay, and now it got here, I think you're gonna be confused when you see this kind of moves. You will think, okay, moving average 200 is in up direction, okay, the price is going up direction right from here with this white candlesticks, so definitely you're gonna be confused and jump into this trade. But now this is where it goes against you. All right, bear in mind the price must surely come back to this moving average period 200, okay, for you to be able to avoid this kind of false moves. This is false movement of the price, a false movement of the price. When I bring back my Bollinger Band, let me bring back my Bollinger Band. All right, my Bollinger Band. From here, when the price is touching the top, the upper band of Bollinger Band, okay, it's touching the upper band of Bollinger Band, and it went straight back to touch, to visit the moving average period 200. And now, if the bigger chart is up, for real, this is where you have to buy, because on the smaller chart, like 30-minute time frame, okay, the price have returned to the moving average 200, giving you a good entry point, the cheapest price ever that you can buy if you really want to buy, in order not to get confused. Now, what is going on with this Bollinger Band? Okay, you see, I love to combine, if you can see my chart now, 30-minute time frame, which is the smaller chart frame time frame, and the 4 hours time frame, which is the bigger chart, which I'm using. Okay, so when you take a look at Bollinger Band on the 4-hour time frame, okay, there's one characteristics of the 4-hour chart which I love so much. Okay, the 4-hour chart, I love it so much based on just one simple characteristics. Now let me tell you, before we go to the 4-hour chart, when you apply this Bollinger Band period 20 on the 4-hour time frame, okay, there is only one characteristics. Okay, the price is either trending on the upper band of that Bollinger Band, if we are really up, if the moving average 200 is trending up. So definitely what you want to see is that the price, let me go to 4-hour time frame and you see, okay, sorry, the price is above the moving average 200. So what do you want to see? Above the middle band of Bollinger Band. This is a 4-hour time frame, very clean chart and clean movement. Now, how do you pick a trade from this 4-hour chart with Bollinger Band? Okay, You say, okay, look at the price. It's above the middle band of this. When we say, okay, the price came back and break the middle band of Bollinger Band, some people will get confused. They start selling against the market right here. This is a false breakout. Definitely, when you look at 30 minutes chart, this is, see what is going on right here. Whenever on the 4-hour time frame, the price, which is the candlesticks, bounce on the middle band of the Bollinger Band period 20, definitely when you look at the 30-minute chart, the price is touching or resting on the moving, is touching or resting on the moving average period 200. And if the 4-hour chart we are above the middle band, then I think you got to go buy. Look at what happened here too. Look at what happened here. Touching the middle band and reversing to the original trend. Look at what is going on here. This is touching the middle band of Bollinger Band. Alright, it's touching it. Okay, so for touching it, 30 minutes chart is paying a visit to the moving average period 200. This is another buying entry. The price is resting on the moving average 200, giving people another opportunity to buy into this market. 4 hours chart. Look at the qualities and characteristics of a 4-hour chart. You see with the Bollinger Band period 20. Okay, when the price bounce on that middle band of Bollinger Band period 20, the price will shoot to the original direction the next moment. See what happened here. After the price touch the middle band of Bollinger Band period 20, the price shoot back and return to the original trend. Have you seen? Look at, touching the middle band, shooting to the original trend. Good. Look at this. When the candlestick bounce on the middle band of Bollinger Band, breaking it with this tail, but